So at its core, we want it to be a really well-managed business. So people that you can trust that have a credible plan. So in microcaps, we can all get carried away. There's absolutely no shortage of opportunity. There's always something happening that is really exciting and capturing attention. We want to bring it back down and say, well, what's going to make this business successful? And often it's the people driving the plan, and that plan being very credible and hopefully exposed to an area of the market that's either growing or they're taking market share. So consumers are changing how we do things. People are interacting differently with businesses and what's important to them. And it's about finding those businesses that can really tap into that and take full advantage. So very much patient. You know, we understand that things often take longer and they cost more, but when successful, microcap companies can really deliver some outstanding returns over very significant time periods. Starting point is having a portfolio. Having between 40 and 55 stocks helps to reduce that volatility. Having spread by sectors is also important. You don't want to be an all-in bet on a single theme. That's really important. And we have stocks at really different stages of their life cycle. So we have stocks where we're high conviction, we think that they're catalyst rich, they're really starting to hit their straps and those inflection points in terms of being relevant to the broader market, or their earnings really starting to take off. And then we have other stocks where perhaps they're 12, 18 months away from reaching that, and others which are perhaps a 3-year view. So there's nice time horizon balance through the portfolio. And there's also a valuation spread through the portfolio. So we think a lot about, we want to find growing businesses, but we want businesses that are trading on value-like multiples today because the market doesn't recognise their longer-term potential. So we think a lot about risk management. Microcaps, it's really easy to say, what's the upside, how big this could be, how quickly can it grow? That's really important, of course, but what's the downside? What could go wrong? How much funding do they need? Do they need to win that big contract? And if they don't, what happens at that point? So all of those things are really important, but that risk management piece, appropriate position sizing for the risk that you're taking, and running a diversified portfolio of microcaps helps to reduce that volatility over time. So 2 things, usually something's changed. So when you bought the stock, where you thought that the business was going, how it was going to develop and kind of build those really sustainable foundations to go on to become a much better, high quality growing business, that's a really important piece. So where we think that there's been an issue around their ability to get there, that's an important piece in terms of, okay, we've got that wrong and we need to move on. Sometimes it can be a regulatory change, it could be a change in market. It's often not the company's response itself that's caused that issue. And the other thing is valuation. I mean, sometimes we've captured a lot of value for our underlying investors and we see better opportunities elsewhere, or we think that the market is just really overpaying for a business at that particular point in its life cycle, and it's time for us to move on. The great thing about microcaps is, in large caps, if you're overweight the banks, you've got the 4 big banks and they're exposed to the same thematics. In microcaps, what makes up capital goods is a varying amount of different businesses. So the underlying driver is not the same in terms of those end exposures. Capital goods, when we look at infrastructure spend on the decarbonisation, looking at the grid and the work required there is so much work required to be done, and there are a number of niche players in these industries that are really, really good at what they do. One of the interesting things post-COVID was smaller companies tended to have much slower supply chain normalisation occur, and even their ability to attract skilled workers into their business was more difficult than larger companies. So that's starting to normalise at a time where they've got lots of work in hand and they're able to productively deal with that, drive improving margins and really scale their businesses. So we think there's some really positive long-term drivers, and a lot of these companies we think are on the cusp of that inflection point where either of a smaller size and getting to a point where they're more relevant, or just those underlying earnings will be a lot stronger than what the market currently forecasts them to be. Software services are as another interesting run. There's still value in building annualised recurring revenue, offering a product that makes it more efficient, more productive for an organisation, using data more effectively. And again, if you're a small business that offers a really great product that can make an industry more productive, then that has real merit. And we see a number of examples of stocks where we think that the product is great, they're at that point where they're getting market acceptance of that product, and we'd expect the take-up rate to be quite strong from this point forward. Australia's been driven by our commodities, and it's been a really important part of the country's success, and we think it will remain so. When global growth is under pressure, commodity prices have to come under pressure, I think, and that's been borne out over the last few months. When we look at opportunities longer term, we are big believers in we need more lithium, we need more copper, we need more nickel. Those things are very clear, but at this stage in the cycle, trying to find the right balance between an ore body that is economic, a management team that actually can bring that into production and generate cash flow, it's a little bit harder in this environment to find such examples, but longer term, we're very, very positive on the opportunities that will emerge.